My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people, my friends, I'm just trying to make you a little money. My job is not to entertain you, but also explain to you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Consumers at last are finally saying no. They are pushing back on high prices. They are demanding bargains. They are mad as hell and not going to take these inflated prices anymore. This rebellion is how inflation is finally wrenched out of the system, and I bet it keeps playing out behind the scenes. As long as the Fed takes its time cutting rates to ensure that prices start returning to more reasonable levels, like the levels we saw before COVID, before the supply chain mess, and some say the price gouging began. The actions of a fed-up consumer is the hidden riptide that's playing havoc with the returns of many different companies right now, to the point where we're beginning to see some actual disappointments all over the place. It impacts the averages, too, even on a seemingly sedate day. Dow dipped 57 points. S&P declined 0.16%. NASDAQ inched down 0.06%. The thing is, to even notice the pushback from the consumer, you need to piece together a ton of different data points. You have to create a mosaic by hand. Can't ChatGPT this one, because companies are reluctant to say, hey, look, we took too much price and now we're rolling it back. Sure, some you can spot with the naked eye. Last night, for example, I told you American Express had a terrific quarter. They did. Company handily beating targets, making a ton of money. But underneath, oh my, as the consumer pulled back. The sequential declines in your spending growth with the airlines, they were going at +9. Now they're only +5. Lodging, +5 down to +3. Those are staggering declines. Those are the signposts of rebellion that's coloring earnings so far. Many argue spend is slowing because we've gotten over the post-COVID revenge travel. You know what? I thought that, too. So far, the airlines blame their woes on having too many empty seats. Sure, but they could have filled those seats if they wanted to. All they had to do was slice price. However, they've been reluctant to do so after tasting that magic elixir of high pricing from extremely full planes. They must have loved that phrase every time they boarded their own planes, don't you think? Don't hear it much anymore. We know that people have clearly caught up on their post-COVID travel plans. I work for Comcast. Comcast Michael Cavanaugh talked about it on a conference call, saying about his theme parks, and I'm going to quote here, we're down in both revenue and EBITDA when compared to last year's record performance, with two-thirds of the decline driven by lower attendance at our theme parks, end quote. Cavanaugh mentioned the culprit, calling it a COVID recovery pull forward of a magnitude we hadn't previously anticipated, hence the record theme park numbers in 2022 and 2023. But now Cavanaugh goes on to say, quote, other travel options, including cruises and international tourism, given the strength of the dollar, have experienced their own surge in demand, which caused visitation rates at our parks to normalize, end quote. I bet that Disney gives you a similar decline in park attendance. One reason that stock's falling apart, down 30 points from where it was trading when Nelson Peltz lost his proxy challenge and sold all his stock. Disney's got 5 cruise ships. I wish they had twice that many, because cruises are doing great. Maybe they could have offset whatever theme park decline we may or may not have. Remember, theme parks are not cheap to visit. I wish they would lower the ticket prices, something that everyone seems loath to do. We know tickets for events have been a huge contributor to inflation from the CPI. Suddenly, I wonder if that's about to change. Cruises are an amazing bargain. Royal Caribbean reports on Thursday, and it hit a 52-week high ahead of that number today. Usually, you wouldn't see that kind of strength in a stock running into the quarter, but the value advantage of a cruise is so palpable that stock buyers don't seem to mind. They don't seem to care. Plus, Carnival reported an amazing quarter not that long ago, and its stock is still roaring. The Norwegian Cruise and the newly minted Viking Holdings have been remarkable performers, too. When the cruise lines boast about their affordability, you know what they do? They compare their room rates to those of hotel rooms, which indeed are much, much more expensive. Maybe consumers aren't flocking to cruises as much as they are fleeing hotel prices, hence the sharp decline in lodging spending growth that American Express talked about. The airline stocks have indeed been clobbered. American Airlines stock is down 24% for the year because it's largely domestic and thus not getting much boost from the strong dollar. It's almost back to its COVID lows. Hey, get this, Spirit's down an astonishing 82% since its deal with JetBlue fell apart. United, Delta, and Southwest are well off their highs. I think this is, again, a sign that ticket prices got out of whack. The only way for them to take back travel market share, I think, is to offer a better price. While nobody's blinked on pricing yet, I think it could be dead ahead. You know what? I also think we can pronounce the domestic travel and leisure bull market just plain dead. And the next thing you'll see is price cuts for everything across the board involving travel. Now, we know that housing's been in a tremendous bull market because there's a home shortage. But today we saw some numbers that make me think the consumer may finally be saying no to higher home prices. Sales of previously owned homes dropped 5.4% in June compared with May, according to data from the National Association of Realtors. Inventories jumped 23.4%. Lawrence Yun, the very reliable chief economist for the National Association of Realtors, told CNBC that, and we quote, "We're seeing a slow shift from a seller's market to a buyer's market. Homes are sitting on the market a bit longer and sellers are receiving fewer offers," end quote. A buyer's market? When did you hear that last? Again, this is exactly what was supposed to happen when the Fed rapidly raised rates, but it took ages to start playing out, didn't it? As that inventory of unsold homes rises, as it grows, we could hit a tipping point where sellers finally get concerned that they may miss out on the peak. I've seen many housing cycles where everyone believes prices can do nothing but go up because we didn't have enough homes being built in the country. But housing prices, they're about psychology. As long as they're going up, everyone holds back on listing their homes. But then there's this period where transactions slow down and sellers are still holding out. They don't want to cut prices, so inventory stops moving. That is happening right now. And you know what always happens after? The inventory builds, and all of a sudden there's a panic among homeowners, afraid to miss out on those high prices. That's when they see a dramatic expansion in the number of houses for sale. It just explodes, which in turn causes prices to just plummet. No reason to think this time will be different. I think there'll be a very different view about housing 3 months from now. Look, we've now seen lots of companies with excessively high prices get a real comeuppance here. Does anyone think that Nikes are a bargain? How about a cup of Joe at Starbucks coffee? Huh? Hey, get this. How about cosmetics from Estee Lauder compared to, say, e.l.f.? Look at the miserable numbers we saw today from LVMH, the highest-end apparel, liquor, and watch company. Sure, a lot of that was China, but there was nothing all that robust in the West to offset China. We know that the consumer's taking advantage of 3 places: Costco, Walmart, and Amazon. The first 2 have been the leaders in price cutting. The third cut prices by items by almost 20% on Prime Day, many of them over 20%. The sales were incredibly strong. That's not just frugality. That is a revolt against every other retailer that hasn't rolled back prices. Overall, I'm betting that this is not the end of the declines. In fact, I think it may just be the beginning. The consumers at last taking action. She isn't just frugal. She's going on strike against those who haven't lowered prices yet. And she's exacting not revenge travel, but revenge against all who've kept prices high. Most important, housing prices should soon be teetering as it becomes clear that the Fed plans to stretch out its rate cuts to ensure that inflation doesn't rise from the dead, like my buddy pal friend Nosferatu. Bottom line, it was only a matter of time before the consumer finally started going on strike. And that time is now. Philip in Texas. Philip.
Hello, Jim. Thank you for taking my call.
You betcha.
I would like to know your opinion of the Wendy's company and if you feel like it's a buy, sell, or a hold situation.
I don't want to touch this Wendy's. I think it could go lower. Now, it doesn't mean I don't like the food. My wife is like, chowing down with bacon there probably while I'm doing this piece. But I must tell you that I think that Wendy's is the odd man out in this group because you got restaurant brands, you got McDonald's. Is there room for Wendy's? I'm not quite sure. Okay, it's only a matter of time for the consumer went on strike. I've been saying it was going to happen, It is happening now. And that's the best way to beat inflation. And I think we're finally seeing it occur. On Man Money tonight, Logitech posted a beat and raise quarter last night, but the stock fell today in response. I'm getting to the bottom of it all when I sit down with the CEO. Then sometimes in the thick of earnings season, you get confused reactions to report, which actually give you a buying opportunity in a high-quality stock. I'm thinking of the situation at GM to see if that's what investors are getting here. Mattel soared yesterday on takeout rumors before falling back to earth today. I'm hearing where the situation stands with the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.